Good afternoon, ladies and gentlemen. I am Pavitra, moderator for the conference call. Welcome to Godavari Power and ISPAT Q2 FY21 earnings conference call hosted by Go India Advisors. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note this conference is recorded. I would now like to hand over the floor to Mr. Ankit Toshniwal of Go India Advisors. Thank you, and over to you, sir.
Thank you, Pavitra. Good afternoon, everybody, and welcome to Godavari Power and ISPAT Limited's earnings call to discuss the Q2 FY21 results. We have on the call Mr. B.L. Agrawal, Managing Director, Mr. Dinesh Agrawal, Executive Director, Mr. Abhishek Agrawal, Executive Director, Mr. Siddharth Agrawal, Non-Executive Director, Mr. Sanjay Bhutra, CFO, and Mr. Dinesh Gandhi, Director. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. May I now request Mr. Dinesh Gandhi to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Ankit. Good morning, ladies and gentlemen. Thank you very much for joining us on Q2 FY21 earnings call of Godavari Power and ISPAT Limited. I trust you have had a look at our earnings presentation uploaded to the exchange and company website. I am happy to report that during these uncertain times, our business continues to show significant resilience, performance, and the quarter under review has performed well. Overall, Q2 has been the highest ever quarter in terms of operations and profitability. Company has achieved highest ever sales and EBITDA during the quarter. Now I'll briefly discuss with you some of the key highlights of the quarter. We have achieved highest ever production across the segment like pellet, sponge iron, billet on account of improving domestic demand. We have achieved highest ever top line, EBITDA, and bottom line as the production and realization improves. As the situation depends on the date, the demand for and the prices for the steel product continues to rise, which is contributing to the performance of the company. We believe that current quarter is expected to be much better than the quarter gone by. We continue to maintain focus on deleveraging and strengthening our balance sheet and continues to repay significantly higher than our scheduled repayment debt. As of date, we have repaid 366 crore of debt as against scheduled repayment of 72 crores for FY21, taking the outstanding to 1170 crores from 1540 crores as of March 20. We aim to break down our long-term debt at a standalone level to be close to 550 crore by March 2021. Our debt still is expected to be debt-free, and our solar project long-term debt is expected to be approximately 350 crore, barring unforeseen circumstances. These numbers which I have told you is looking at the current market conditions and the business scenario. If anything goes wrong, then definitely there could be some variation in the performance. Further, I'm pleased to report that our credit rating has been improved to A, and the rating has now been assigned by the CRISIL. The BBB rating was from the CARE rating. So our debt profile is increasing, our rating has also been improved, and we are now looking forward to significant reduction in our cost of debt going forward, which the lenders are in the process of processing our request. I would now touch on the key strategic priorities of the company. First of all, I would like to state that we have made a strategic sale of our stake in Ardent Steel Limited, which is our subsidiary, along with some stake held in our step-down subsidiary for a consideration of 95 crore. The logic behind the sale of stake is that iron ore situation is becoming challenging in Odisha after the recent auction of iron ore mines. And this transaction will help us secure long-term raw material security by leveraging the network of our strong network of our local partner. GPIL will continue to have management control. The proceeds from stake sale will be used entirely for debt repayment. The focus of our the management has been to consolidate the operation and grow the same in Chhattisgarh and divest the stake in non-core businesses. As you are all aware, Ardent Steel is operating a single pellet plant without any integration either from the iron ore or on the value addition side. So when the project was set up, the whole objective was to encase on the situation of the iron ore prevailing in 2008-9 when the prices were very high. Over a period of last 1 decade, the situation has considerably changed, and we thought that it is the right time to partially encase our investment and recover our investment, make some profit on that, and continue to hold some stake in the subsidiary and manage the operations. That is the whole, and utilize this proceeds to repay the debt so that we can more consolidate, grow, reduce the debt in the standalone balance sheet and grow the business in Chhattisgarh. Chhattisgarh, we are running a 2.1 million ton pellet plant, and which is expected to be capacity is expected to increase to 2.4 million ton. And our finished steel business is 0.4 million ton only. And our aim is to integrate this business over a longer period of time. Our focus will continue to debt repay in the meantime before we start announcing the capacity through the internal accruals. And we will continue to divest and focus on stake sale in our subsidiaries so that the entire proceeds could be utilized in Chhattisgarh, where we have more control on our input costs and have substantial raw material integration as compared to the Odisha. That has been the whole focus behind this transaction. Deleveraging and strengthening, as I said, will continue to remain our key strategic priority. Free cash flow from operations will be utilized towards deleveraging. We aim to become long-term debt-free in the next 2-3 years, depending upon the market conditions. Overall, our long-term strategy post deleveraging will be to add steel capacity in phased manner through internal accrual and move up the value chain. The company has been focusing to increase sustainable EBITDA and the PAT through the capacity enhancement by debottlenecking and efficiency improvement. This process will continue, and in the meantime, we will be able to liquidate our debt fully. But I want to make our intent very clear that we do not want to take any large capex going forward and grow the balance sheet through the internal accruals and cash generation from the operations. Before I open the floor to the question answer, I would like to briefly discuss the industry scenario. As regards the international outlook, iron ore prices have climbed from a low of $80 in the April to about $128, almost touching 2-year high about a month ago. Iron ore prices have remained well supported despite global players returning the production and maintaining their guidance. The demand for iron ore continues to remain strong in China. Pellet prices have been tracking the higher iron ore prices and remained at about $135 CIF for China. With the onset of winter, the demand for pellet is increasing in China. And you would have recently observed that despite international fall in prices of iron ore by about 10%, pellet spread is going up and pellet prices continue to remain strong. So even if the iron ore prices go down to some extent in international market, the pellet spread will increase. I do not know how many of you have observed that when the international iron ore prices was going very high, the pellet spread was squeezing. Now the pellet spread has again started increasing, and therefore the pellet prices continues to hold. As regards the domestic, the iron ore prices have doubled in the last 6 months to about 6,200 for 63 Fe iron ore in Odisha. Iron ore prices are still at a steep discount to the global prices, and hence there is a steep scope for Indian prices to go up further. Iron ore cost curve has bumped up due to short-term winning bid premium in the recently held auction in Odisha. and has been between 90 to 150% of the IBM declared prices. Only 5 of those mines have started production. Pellet prices currently are ruling at almost 2-year high at about 9,500 rupees a ton in the domestic market. And with this, we have reduced our focus on export. We now continue to sell our entire production in the domestic market. As you would have observed, the demand as compared to the Q1, demand for steel, finished steel has also started increasing, including sponge iron, and prices have also increased, as you would have seen in our presentation. And after that also, there is a further price increase about 2,000 to 3,000 rupees a ton across the value chain. Although, as you are all aware, the external environment continues to remain challenging. However, we are undertaking multiple strategies and initiatives to make our business model resilient to these external disruptions. Our extensively integrated and highly cost-efficient operations give us a unique edge, thereby ensuring the long-term sustainability of our business. With this remark, I would now like to open the floor for question and answer. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Dear participants, please press star and 1 once for any questions to be asked. If pressed twice, the question will be withdrawn from the queue. We have first question from Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question and congratulations for a very good set of numbers. I have a couple of questions more on industry side. The first one is on iron ore mining scenario in Odisha. So we have seen that, as you rightly mentioned, that just 5 mines have started and there is a shortage of iron ore. But do you consider it as a short-term thing? Because Odisha government, of course, is taking all possible steps to ensure that people ramp up production soon. So won't it bring down the iron ore prices in the country? And therefore, the shortage of iron ore could be a very temporary phenomenon. So in this light, does this, stake sale of ardent steel, which has been quite a bit of cash cow for you, make sense? That is the first question.
So I would take the last your question first, Amit. Ardent steel, as you are aware, last 2-3 years has been definitely a cash cow for us. But this business, ever since it was set up in 2011, has had its own substantial volatility, substantial ups and downs in the businesses because of the iron ore market conditions, primarily iron ore market conditions. Depending upon the scenario, the volatility has been there. And, similar kind of performance we had seen in 2013-14. And after that, we had seen substantial losses also in this business after 1 or 2 years thereafter. So while I agree with you that iron ore scenario in Odisha is definitely a temporary phenomenon. We don't know how long it is going to go. Maybe 6 months, maybe 1 year, 2 years, depending upon how soon the mines are able to ramp up and how much they are able to sell it in the open market. That is based on that the scenario will evolve. We really don't know how long it is going to go on that. But in the interim, the pellet prices continues to remain high, and the iron ore prices you would have seen in Odisha has substantially increased. At some point of time, it is likely to squeeze the margin in the pellet business. We have seen this in past, and therefore we have this is a single product company. So we have taken a considered call that maybe in the interim for the company and whatever we have earned in last 3 years, we are trying to encash. Prior to that, this company was zero in any case and carrying a debt of 200 crore on our shoulders. So, we as a management in the company will have to take a long-term call rather than taking a short-term decision on the businesses. And we continue to carry a substantial stake in that, continue to carry our management control on that, and try and grow that business, with the help of the local partner in whose favor we have partially sold our stake. And I think I have given the answer to your iron ore question, and I have replied to your pellet other distillation question as well.
That explains, sir. Thank you. The second question is on essentially when I look at your sales volume, MS round is very impressive at 138% increase YOY and even on QOQ basis. Similarly, steel billets. So, any specific sector you saw this going, or whether you see it as a one-off event, or whether this kind of sales traction will continue? Specifically, I'm more interested in the sector where it is going.
Amit, first of all, I would like to mention that our billet and round production was considerably low if you compare this data from last 2 years old. That time we were operating billet capacity of 200,000 tons and our round capacity of also 200,000 tons. Recently, we have integrated our billet capacity with power from our associate company Jagdamba, which is in the process of merger. And we have set up another rolling mill in Chhattisgarh, and which is taking our production volume to higher. As regards wire rod, we have started now exporting the wire rod to the international market as well. We have recently concluded some export consignment to China. And as regards which sector it is going, I would request our MD, Mr. VL Agrawal, to address on this question, please. Over to you, BL sir. Hello. Hello. Abhishek?
Hello. So please go ahead, sir.
Hello.
Hello. Yeah.
Yeah, I'm here. Dinesh, I'll take this question forward.
Yeah.
The whole, sir. So, with the new rolling mill being commissioned in Godawari, which is a hot charging. So, with the advantage we have currently in the market is we are able to produce quality products because the sulfur, phosphorus in our raw material is pretty low because of our mines, because of which we are able to produce export quality material in which the realization is roughly, I would say, 2,000 rupees more compared to domestic market. So going forward, we are very confident the MS round division along with the billet integration will give us additional, margins of, 300 to 2,000 rupees due to the huge demand in domestic export market. And currently, we have already started exporting to Nepal in a big way, and there is huge demand of our wire rods in the Nepal market.
Okay, great. Thanks for the elaborate explanation and all the best.
Yeah, thank you.
Thank you.
Thank you, sir. We have next question from Gaurav Rateria from Morgan Stanley. Please go ahead.
Hey, thank you for taking my question, sir. I have again industry-related question on Odisha iron ore situation right now. So, firstly, any clarity on the erstwhile miners whose leases have expired? Are they still able to evacuate the material, or that ended on 31st of October, or has that been extended? That is first question. And secondly, do you see that the other miners who have won the mining leases, who have not started production, are likely to do so in the next 6 months? Any clarity or any intelligence around that? Thank you.
I'll take this question. I will take this question. So when it comes to the evacuation, so the old lessees have filed a petition in the High Court seeking for extension, for which the decision was supposed to come yesterday, but the High Court has deferred the hearing. So as of now, the old lessees are not allowed to evacuate the old pending stocks. This answers your first question. So we have to see whether the High Court allows them extra permission or gives them extra time to clear the old pending stock. As of now, the modality which the Odisha government has formed is all the old stocks which are available in the mines, that will be handed over to, and that will be sold in the open market through e-auction. And the second question, as Dinesh rightly said, out of the mines auction, only 5 started producing. So it is still very unclear whether the new owners, which have won the mines of the bidding, will willing to, start the production, because the premium is so high. So when you calculate, so practically the mine becomes unviable for commercial operations. So we still need to wait and see. For example, GSPL has already filed a petition in the court saying there is a legal issue with the mines regarding the coordinates. So I don't think so GSPL is likely to start the mines very soon. Same is the case with Sham Mining, which has won the SL Mining, Jilling one. So the bigger mines, which are supposed to be in production on today, are still waiting to start the production because the new owners have filed petition in the court seeking there is a technical issue in the coordinates given by the Mine Department of Odisha. So I would foresee that these mines will not come into production very soon. It will take much longer than anticipated.
Sir, in that case, what is the way out? Like, let's say if the new miners do not come into production for next 2 months or whatever time, will this mines be back and this go into the rebidding again? What will the process look like? Will it be a 3, 4, 5, 6 month process and disruption can continue in the production for next 2 months?
Odisha government is definitely putting pressure, and they have also issued show-cause notices to both the new owners for not achieving the desired production as per the Mining Act. So I would say it's a tussle between the government and the new owners because they have filed petition in the court. So I think the shortage of iron ore will continue for a longer time. They might come to bidding again. They might not come to bidding again. They might start production. So everything we have to wait and watch. There's no clarity still.
So last question, any clarity on how much of inventory is there of high grade ore which can be
whatever old stock is lying, all the stock is below 58, 59 FE levels.
Okay, so this inventory is not good enough for the domestic steel production, right?
Sorry?
This inventory of iron ore below 58 will not necessarily be used by domestic market for the steel production, right?
No, this iron ore cannot be used in the market for steel production. This is basically a low-grade inventory which probably can be blended with high grade to make steel production. But standalone, they cannot be used for making steel production.
And how much will the inventory be left over as of October?
It is close to 28 lakh tons. 2.8 million.
Oh,
no, this is close to 28 million. Sorry, this is close to 28 million.
Sorry, 28 million. Sorry.
Okay. Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Dear participants, please press star and 1 once for any questions to be asked. If pressed twice, the questions will be withdrawn from the queue. We have next question from Pinakin Parekh from JP Morgan. Please go ahead.
Thank you. So my first question is that in the beginning of the call, the management mentioned that domestic pellet demand is running strong and hence exports have reduced. So can you give us a sense of what is driving the higher pellet demand in India?
So it is, frankly, the higher steel demand is driving the higher pellet prices and shortage of iron ore.
So going forward, I mean, given what the iron ore situation is, it is fair to assume that even pellet prices should remain elevated over the next few quarters?
Sir, this is a winter season, and the demand from China is also there in the winter season for the pellet because of the restrictions in the sintering in China, and therefore it is safe to believe that this situation is likely to continue for a couple of months before we all get our clarity. Nobody is clear on this how the market situation is going to evolve. So let us wait and watch for that. Yes.
Understood. Thank you very much, sir.
Yeah.
Thank you, sir. We have next question from Meghal Soni from Quant Mutual Fund. Please go ahead. We have next question from Meghal Soni from Quant Mutual Fund. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead with your question.
Yeah, hi. Sir, my first question was regarding the iron ore prices right now. So in case of fall in iron ore prices, will the current margins be sustainable for the company? And in case not, then what do we plan on doing to do the same?
No. See, the prices have always been volatile. And if you see over a period of last 3 to 4 years, we have been selling pellet at a floor price of average for the whole year, closer to about 6,500 rupees a ton. And therefore, to that extent, our performance has been volatile. And if you have not seen our numbers, you can see the numbers. So depending upon the pellet prices and steel prices, this business is the nature of this business is like this. So therefore, the fluctuations are going to be there depending upon the market conditions.
Okay. And
okay. Our long-term strategy will definitely be, but not in the medium term. Our medium-term strategy is continue to focus on debt repayment. We are not going to add any substantial capacities. And as we go forward, gradually we are going to build the capacities in order to make sure that our entire material is captively used. But it is a longer-term dream.
Okay, sir. And secondly, what would be the capacity utilization right now?
It is more than 90% across division.
Okay, so in case there's a boost in demand, so we wouldn't be like playing along with the market in that case, right? We only focus on the debt repayment part of it.
I'm not able to hear you clearly.
Hello, can you hear me now?
Yes. Yeah.
Yeah, hi. So I was asking that, so basically in case there's a boost in the demand, so would we be able to meet that demand, or we would continue to play at the current capacity and just try to pay the debt at the moment?
No, I'm not the only manufacturer in India, so I cannot meet all the demand. So we will meet the demand to the extent of our capacity and to the extent of what we can manage the operations. And rest is up to the market to feed that demand.
Understood, sir. Okay, thank you.
Thank you, sir. Participants are requested to restrict with 2 questions in the initial round and join back the queue for further questions if time permits. We have next question from Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir.
Good afternoon, Vikas.
Sir, sorry, I joined a little bit late, so pardon me if I'm repeating any questions. Sir, I just wanted to understand our debt reduction target. So we have already been quite aggressive and reduced 360 crore plus in first half. So how do you, with the current elevated prices, how do you see that the next 6 months or a year, how much of more debt reduction is possible?
See, whatever we have repaid, close to about 90-100 crore will be repaid from the proceeds from this sale of Identity Steel. The moment this transaction is closed. Over and above this, we are targeting to reduce further debt out of our case, internal accruals, from November onwards. So, in all, we are targeting to take, as I said in my opening remarks, to about 550 crore at a standalone level. We expect the Identity Steel to be long-term debt-free by end of this financial year. And our solar debt should be closer to about 350 crore at the end of the year, FY21.
Okay, sir. Okay.
So, in all, long-term debt will be close to about 800 to 900 crore, depending upon the market conditions.
Okay, that's quite an aggressive plan. And so my second question pertains to, sorry sir, you are saying something.
Sorry?
You were saying something, I thought.
No. I finished my reply.
My second question pertains to our average prices. So with November, the first thing is that how is the pellet and sponge prices faring versus the 2Q average? And do you think that at current prices, how our pellet export mix would change? Are we already skewed more towards domestic because that is more profitable? Or are we still more on the export profitability?
No,
or the export is still higher?
Yes. You have finished?
Yeah, finished. That's
so far as export of pellet is concerned, I think the major export was in the month of August. After that, we gradually, started selling in the domestic market, and currently 100% of the production is sold in the domestic market. This is one. So far as sponge iron and other steel products are concerned, you have seen the realizations up to average realizations from up to the October. After that, on an average, as on the date, the overall increase is close to about, say, approximately 2,000 to 3,000 rupees across the product value chain. And
so in pellets also
about
2,000 rupees.
Sorry?
9,500. So roughly 2,000 rupees higher for the pellets as well.
Yeah, mostly across the product.
Okay, sir. Okay. So that would largely flow into your EBITDA for next quarter.
Hopefully, unless some cost increases, which is very difficult to say at this point of time.
Okay, sir. Yeah. Thank you, sir. Thank you for taking my question.
Thank you.
Thank you, sir. We have next question from Abhijit Mishra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. My question is on the Ardent Steel deal which you have announced. So any reason for this valuation benchmark? I have seen what you have shown, how you have reached at this valuation. But given that 100 crores EBITDA run rate has been obtained in last year as well, I mean, how do you sort of look at first of all this valuation, and what was the urgency of selling this asset as of this point in time when we are already seeing healthy profits?
I think, Abhijit, I've replied to this question, to the last question, but I don't know whether you may not be there on the call at that point of time. So just for the sake of repetition, number one, as regards to the valuation is depending upon the time, but when the times are good, the people does not agree that this kind of times are going to go longer. And if somebody is investing for a longer term, he has to see over a period of time how this company has performed. And it is not a single year or 1 year, 2 year benchmark. And the situation of iron ore in Odisha, that is the another reason for which us to divest part of our stake in that and utilize the proceeds to repay the debt and consolidate our operations in Chhattisgarh, where we have a considerable control on our cost through the input, captive inputs which we have. Odisha is a single product, standalone, pellet plant. So a standalone pellet plant, if somebody wants to set it up, he will take maybe another 2 years or so and set up a project. It is not something which is very, high, which, cannot be set up. And iron ore scenario in Odisha is changing now. So we don't know where it is going to go ahead. We have seen this kind of ups and downs in past. And looking at this, we have taken a considered view.
Okay, and two questions just to add to that. Any additional help that the association of Mr. Poddar or the company to whom you are selling to, that will help in terms of sourcing? Yes. How will that help? If you can just...
Sir, the Transtech has an experience of dealing with all the mines in Odisha. Has been into the trading of iron ore business, and as I said earlier, we will continue to have the management control on the company, and Mr. Poddar will support in terms of the securing the raw material for the plant at a competitive prices.
Okay,
and so there is the long-term profitability. Yes.
Yeah, and this will have to be. I mean, you have to take shareholder approval for this acquisition, or
yes.
So majority of minority will have to be taken.
I'm sorry, my company secretary is not there on the call, but we can address it to you separately, Abhijit.
Sure.
Yeah.
Sure. Yeah, that's all from my side. Thanks.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Please note that star and 1 should be pressed only once. Pressing multiple times will put you out of the queue. We have next question from Reena Shah from Ashika Stock Broking. Please go ahead.
Thank you for the opportunity, sir. Here somewhere you have mentioned that from Godavari Green Energy Limited also you would be looking to pay off your debt. So just wanted to understand how this is going to happen.
Can you speak loudly, please?
Can you hear me now?
Yes, I can hear you now. Yes.
Okay. Basically here you have mentioned that from Godavari Green Energy Limited also you would be paying off from the sale of that. So what is the plan for Godavari Green Energy Limited?
Godavari Green Energy Limited, is a standalone operating asset running a 50 megawatt solar power plant in Rajasthan. You may be aware about it. We have been looking to divest this asset as and when we are able to find an appropriate buyer and utilize this proceeds in our steel business going forward.
Okay, so what is the expectation of raising? How much funds can be raised to some of this?
That depends upon buyer and seller. I can't say anything about it. First of all, I have to find a buyer. Once I get a buyer, then the price will come. Yes.
Yeah.
But so this asset, we continue to reduce the debt. Over a period of last 5 years, we have reduced the debt by 300 crore. So in any case, another 5 years, this company will be debt free.
Okay.
So this company, whatever is the balance sheet size, the case will eventually be free for us.
Okay.
And every year, 90-100 crore kind of EBITDA this company is generating.
Okay. So from this non-core business sale of assets, how much debt are you targeting to be repaid approximately in total?
I don't have any numbers around this because I don't know when this asset will get sold. So I'm not, my current year target which I've mentioned is purely, 100 crore approximately out of the sale of the stake in Ardent Steel and remaining in from the operations.
Okay. Understood. Okay. And sir, any debottlenecking plans, extension of capacities, any possibility?
No, I think that has already been announced earlier. For the sake of, again, I would like to say that in our iron ore mining, we have, Aridongri mines, we are extending the capacity from 1.4 million to 2.3 million ton, for which we are awaiting the environmental approval. We are taking our sponge iron capacity from 500,000 tons to 600,000 tons. And, the environmental approval is received, but we are awaiting consent to operate from the state authority. So once those permissions are received, we will be able to enhance the capacity. Similarly, we are extending our pellet capacity in Chhattisgarh from 2.1 million to 2.4 million ton. That is also under environmental approval currently. And similarly, the capacity is through debottlenecking will be enhanced in the other value chain as well over a period of time.
What could be the possible timeline to complete this? Any rough guess also, if it's possible to get?
At least so far as sponge iron is concerned, we are expecting it to start in the current financial year sometime. And once we get the environmental approval, which also we are expecting by end of this year, but maybe early next year, and after that, the process will start, like mine development and other things.
Okay.
Yeah.
Okay. That's it from my side. Thank you, sir. And congratulations on the good set of numbers.
Thank you.
Thank you, ma'am. We have next question from Ayush Mittal from MAPL Value Investing Fund. Please go ahead.
Good afternoon, sir. First of all, congratulations on a good performance. Some of my questions have been answered. So I have one question more, which is more on that change in stance that we used to export iron ore, and we used to export the pellets, and we wanted to do more of high-grade pellets. But I don't see any update on that. Is it also due to the change in industry stance wherein the high-grade raw materials are not to be exported? So should we be increasing billet capacity and those things going forward to utilize more of a high-grade resource that we have and not export the same?
I see, situation is like the high-grade pellet, still, there is a demand constraint from the international market. This product will not go to the China, okay? So we are still waiting, number one, waiting for the clarity Number two, you know that there's a UN cry about the, pellet export from domestic market.
Yeah.
So, it is a, temporarily so far as when we get more clarity on these issues. And in the meantime, we are finding a good price in the domestic market. So, rather than scouting international market for anything, it is better strategy to sell next door in smaller quantities, get the money immediately, and otherwise you accumulate the material at port, 50,000 tons, then complete the export consignment and then get the money. This itself takes 45 days to realize the funds after the shipment. So, when the domestic demand is there is no constraint on us to sell in the export market unless we get a good price for our high-grade pellets. And then we'll continue to use, as Abhishek said earlier in the question, we'll continue to make, the high-grade billet from the high-grade pellet and convert into the wire rod and sell the wire rod and billet in the domestic market.
Yeah. So that's what I was trying to
realize that value ultimately.
Yeah. So will we be looking to expand more of the capacity into wire rod and billet so that we can utilize more of our raw material efficiently going forward?
See, my second phase of billet, MS round capacity is concluded only in the month of March. Okay. And billet, we have now started utilizing 100% of the capacity. We have already applied for 600,000 tons of the steel billet capacity at our existing location, and which is under environmental approval. Once that environmental approval is received, then we'll gradually increase, in line with increasing sponge iron and other capacities. But it is very difficult to specify a timeline. Once we get the approval, we will be still in a better position to say.
Got it. Yeah. So second, like you mentioned about the UN cry in the industry, and though there was some clarification from the government around the pellet export, yet it remains a risk, policy risk, and all those things remain. At the company level, how do we think about this risk and balancing this?
No, see, government policies, you can't do anything about it. So far as, you have to, change your domestic business model, your domestic business model, depending upon the evolving situations. And we will continue to aim towards that.
Okay. Yeah. And sir, also in line with the earlier participants who have asked about this ardent valuation, it does looks to be on the lower side given the change in the balance sheet and the operational improvements we had done in the company for last 2-3 years. I understand that it's a cyclical thing, and now with not the raw material integration, the fortunes can go the other way. But still, given the improvement, it remains a question mark. And also, we are unable to understand any quantitative benefits that we would be getting by partnering with the local person. And why still have this, say, 37-38% stake? Why not sell it off completely or do something around this to ensure better value unlocking?
See, Ayush, it's a very good question. And, as you know, that the iron ore scenario in Odisha is evolving and changing day by day. Okay, so, that is taken for granted. If you just see 3 years behind, in 2017, this company, was with us with almost 175 crore of debt with zero value.
Yeah, I understand that.
Okay, but, and I think, in 2015, I was earning the same kind of money. Okay, so it has been so volatile and single product companies and as you know, we are on the debt repayment mode. So I can't put more investment into the Odisha and grow the business and integrate it.
Of course. Got it.
So, okay, so what we have done, we have got a strategic partner. And with the support from the partner, we will take it forward. And therefore, we are keeping our stake also so that further value could be created out of this remaining stake.
But the partner
can't... the idea is not only to run this plant. The idea will be to longer term grow that balance sheet. And association with the partner is we are not in a position to invest more money.
Yeah, but does the partner have some mine integration or something because of which we get some surety or benefit?
We are looking for the mine integration. He does not have right now, but we in association with him, we have started scouting for it.
Right. Okay, sir.
And
Thank you.
we have substantial raw material in Chhattisgarh, and we don't have the full integration in Chhattisgarh. So by the time I use my internal approval in Chhattisgarh, I will not be able to invest in Odisha. And this investment, Ayush, was never in our, it was more of an opportunity. It's in the investment in 2010-11, when we saw that substantial gap in iron ore prices and the pellet prices are there. So we thought of putting a plant, make it debt free and sell it. We tried to sell it in between many occasions, but we were not able to find a buyer, buyer at a kind of valuation which you guys may be looking at it. Our ambitions were very high at that point of time. But then, depending upon the situation and your experience, you have to change your strategy. And that is exactly what we have done.
Okay. So, yeah, that's okay. Yeah. Thank you.
Thank you very much, Ayush.
Thank you, sir. Due to time constraint, participants are kindly requested to restrict with 2 questions in the initial round and join back the queue if time permits. We have next question from Parthiv Shah from Tracom Stockbrokers. Please go ahead.
Thank you for taking my question, and congratulations on wonderful set of numbers, and most importantly, debt reduction was fantastic. Sir, my question is regarding understanding your strategy of the asset sale. So please correct me if I'm wrong. Your idea is to increase capacity by debottlenecking at a place where you have mine linkages, which is right now giving you almost 4,000 rupees a ton sort of a leverage, operating leverage, and reduce the dependency on a place where there's a lot of volatility, which you have increased capacity from 0.6 to 0.69 and kept your stake low there so that in future any progress you can further enhance. So, sir, I mean, overall, if I go to see ballpark, you are having 2.8 million tons per annum of pellet capacity, where 0.7 was from Ardent and rest was from Raipur. So now the equation changes for your benefit, where you are having more capacity at a place where you have mine linkages. So am I right, sir? Is this your vision or strategy of doing this particular sale?
Exactly. And at the same time, make sure that Ardent grows at its own. Okay. So that, you can encourage the remaining, investment at an appropriate time and increase your value going forward.
Fair enough. So another question is regarding what Abhishek sir talked about, the IBM price and the trend which is currently not very conducive for the GSWs of the world or the ArcelorMittals of the world to really do a lot of mining. Right, but what I've read in one of the data is that ArcelorMittal has started importing high-grade ore from overseas markets. Sir, the landed cost of that, isn't it more than if they start mining? I just want to understand this particular metric. And also, sir, I mean, yes, there's a lot of talk about sustainability of the current advantage we have, but let us take the other scenario also, wherein worst case, if the supply were to increase, what is your outlook in terms of normalized rate of pellets in the Raipur region?
Sir, last 3 years, if you see, the prices have been volatile between 6,000 to 8,500. So right from 2016-17, I'm not talking about prior to 2015. 2016 and 2017 was extremely bad scenarios. Okay, so if you talk about after that, our average realization has been closer to about 6,200 to 6,500 rupees a ton. And that is the benchmark which we have seen. And higher, if there is a shortage, the prices will, remain higher, and you will continue to take the advantage of that.
Correct. And sir, like one last question is regarding your solar business. So when you're going to be at a debt level of 350 crores, and I assume that you are going to try and even reduce your rate of interest because of the recent upgrade, what will be the projected IRR in the solar business? Because I saw in your presentation you mentioned some sort of debottlenecking which can enhance your storage capacity. So what sort of IRR we are talking of? And why I'm asking is so that we get to know that at that IRR, I'm sure there will be more suitors for buying that asset, because that you always mentioned as a non-core asset and you plan to monetize that and use the funds to further deleverage.
See, there are two strategies which are going on in the solar project. One is do some kind of debottlenecking given the constraint and increase the generation. And this year, since April, we have already been successful in getting higher 6 to 7% higher generation, despite the slightly better generation as compared to the, depending on the DNI. So, while that strategy continues, at the same time, since our rating is now, improved, we would be renegotiating rate of interest with the lenders and trying to bring down the cost by 2%. If you see, put together both, we should be aiming closer to 13-14%, IRR on this project, which was, considerably lower earlier.
Sure. Thank you so much, sir. That answers all my questions.
Yeah, thank you.
Thank you, sir. We have next question from PB Jalan from KLJ Securities. Please go ahead.
Thank you very much for taking my question. First of all, congratulations to the management for giving the excellent result. My question
Thank
is
you, sir.
whether, sir, now can you hear, sir?
Yes, go ahead.
Sir, I want to know whether do we have any practice to sell in advance, more particularly pellet? If yes, then at what rate and up to which period you had covered it?
Abhishek?
Yeah. So currently the prices in the domestic market are hovering around 9,500 levels, and see, with the volumes we have, so usually we have a 3 to 4 weeks of order. With currently the average pricing should be somewhere around 9,000 rupees.
And what are the outlook about up to the March? What do you feel?
See, it's difficult to comment on the outlook for the next 6 months. But, looking at the current, hue and cry in the iron ore market, the availability of iron ore, especially of high grade. So, we are hoping if the situation continues to be like this, then the price is gonna keep going up only. Doesn't seem it's gonna come down, very soon.
Okay. Thank you very much.
Thank you.
Thank you.
Thank you, sir. We have next question from Rishi Gupta, an individual investor. Please go ahead.
Hi, thanks for taking my question, and congratulations on a great set of numbers. I have a couple of questions. One would be just on the debt cost. I guess historically, when you look at the numbers, the debt cost.
Can you speak loudly, please? Can you slightly?
Sure. Is that better now?
Yeah.
Okay. So my first question is around the debt cost. The current debt cost is around 11.5% based on the prior numbers. So maybe what kind of discussions are you having with the banks, and where could we see the debt cost for the company from let's say next year onwards?
See, we are discussing with the lenders to bring down our cost of debt to 8.5% per annum. From about 11, in our solar debt, it is currently at 10.40, and in steel business, it is closer to 11%.
And by when do you think the debt cost would come down to 8.5%?
Definitely, this kind of rate we expect to be applied in the full for the next financial year. And in the current year, as the lenders start approving, it will gradually start falling down, depending upon which lenders approve first, and naturally, the leader will approve first, and then the others are likely to follow.
My second question is more around Ardent Steel. I know you've answered some questions on that, and people try to ask this through different ways. But maybe in terms of, first of all, in terms of the value the new buyer adds. So you did mention the new buyer does not own any iron ore mines, but maybe a bit more clarity on how they are able to add value to sort of Ardent Steel's current process, like iron ore purchase process.
See, our objective in this deal has been more to de-risk the business. Partially, in case our investment in that company, which has been made about 10 years ago. And partially, we are trying to, with the help of the partner, trying to ensure that we get input for the pellet plant at a much competitive, prices. And that is what, is the main reason behind this particular transaction.
But given iron ore is a commodity which gets like a bulk commodity, how could someone provide you a concessional rate or access to a commodity versus the company who's a consumer itself?
No, it depends. If somebody has a long-term tie-up with someone, that is possible.
Do they have a long-term tie-up?
Frankly, I'm not able to comment on this, at this point of time. But we have been assured that the raw material will be available at a competitive price.
Okay.
And if we are saying something, then there has to be some reason behind it.
Right, which is, I guess, clear to you, but unclear to at least a lot of investors at this point in time. So that's why I asked questions around, if you could clarify.
Sir, as you go forward, I think you will get more clarity on this.
Sure. And just one more question on Ardent Steel on the valuation. I completely understand the cyclical nature of the sector, and but you are now selling this asset at 2.5 times EBITDA, or somewhere close to that. Given the cyclical peak nature of EBITDA and similar business with Godawari Power as well, the main company, should we assume 2.5 to 3x being fair value for cyclical businesses per management's view on sort of long-term basis? Like for Godawari Power, should we use the same? Why shouldn't someone use the same multiple?
There is no quantitative method for this. There is no quantitative method. Each business is valued, by the investor and the buyer and seller, depending upon the scenarios. Okay, and Ardent is a single product company, and how much time it takes to set up? 1.5 years.
Sure.
Okay, so it all depends. What kind of circumstances this company creates, and what is your ultimate objective? Are you do we want to expand at our own investment in Odisha? No. We want to rather expand in Chhattisgarh, where we have our captive resources. So I have to see where my larger benefits are there.
All right, but you would still be managing that company, and then would the new partner be bringing in new fresh equity into the company, so for expansion?
No, he is not bringing the fresh equity. We are selling it, and fresh equity may come at a later date when there is a requirement in the company. Currently, there is no requirement in the company.
Got it. Great. Thank you.
Thank you very much.
Thank you, sir. We have next question from Bhavesh Chauhan from IDBI Capital. Please go ahead.
Hi, sir. Congratulations on a great set of numbers. My question was regarding the interest rate. Currently, we are paying around 11%, and we have been given very good ratings by CRISIL. So when does the cost of interest fall for us, and what are the discussions with banks? Are they going on currently?
Our initial indications are positive in discussion with the lenders, and with the improvement in the lenders, they also save some cost on the capital. So discussions are going on the positive side, and we expect this to materialize gradually by next quarter and complete by end of financial year.
Okay, great. And so lastly on the prices, now the pellet prices are 9,000 in the domestic market, and our realization this quarter in the standalone pellet from business was around 7,000. So, and we are now focusing more towards the domestic market. So, on a sequential basis, should we see better realization? Or should I put it this way, what are the realization for October month?
No, realizations are better as compared to the average of last quarter. In the current quarter, averagation, I have said, I think in my opening remarks, it is about 2,000 rupees higher as compared to the average of last quarter. And this is the average. Now, there could be some, gradually the prices have increased. So how much eventually it will aid in the quarter would be slightly here and there. But current prices are about, 2 to 2,500 rupees higher as compared to the average of my last quarter.
Great. That's helpful, sir. Thank you a lot.
Yeah. Thank you.
Thank you, sir. We have next question from Sameer Joshi, an individual investor. Please go ahead.
Good afternoon. Congratulations for the good results. I have question about Ardent Steel. As per the latest quarter results, Ardent Steel is getting a EBITDA margin of 20%. While what I understand is the stake has been sold at book value. Now, considering the current interest cost of 11% and going ahead interest cost of 8.5%, wouldn't it be negative for shareholder value in case Ardent Steel is sold at such distressed valuation? Especially considering currently we are at just a start of upward cycle in case of all metal industries. Thank you.
No, sir, the point is, if you want to divest stake in any company, you have to look for a good cycle rather than bad cycle. In bad cycle, nobody is there to pick you up. And as I've repeatedly said in my replies, our focus remains on the Chhattisgarh, where we have a resource, and therefore we have partially increased the stake at a reasonable value.
No, but this new partner is not going to add any value to Ardent Steel, and in spite of which we will be keeping some 40-odd% stake. So my basic question is, what is a reason for selling the stake just for 99 crores or something? Because the value addition through EBITDA and profitability will amount to much more than what you will save on account of interest and return of capital.
Sir, the past numbers are not the trend for the future, especially in Odisha, where there is a shortage of iron ore. Okay, and iron ore prices are really starting. Unlike Chhattisgarh, where we have a control on the raw material, there we do not have the control on the raw material. So I cannot increase my spread, and if the market conditions go here and there in near future, then this spread will also go down. So it depends, how the you don't know how the future is going towards. So you can keep the last 1 year, 2 year profitability in mind and take a decision. And I don't think I have anything more to add on this prediction.
Okay.
Yeah. Our MD sir is there, BL sir. Hello.
Yeah, Dinesh.
Sir, you want to add anything over and above what I have said for the ended the steel transaction? Hello.
So please go ahead, sir.
No, I think his call is dropped. Hello.
Please go ahead, sir. Yeah. You're audible now, so please go ahead.
I think he's not there on the call. So, sir, the point is that, when you see a value, you should be able to realize it. Unless you realize the value, tomorrow the same value may not be there on the table. And we have seen this in past.
Correct, but steel cycle changes, I think, almost 10 years. Now, what I understand is this is just a start of steel cycle. And considering
we are there to, take the full advantage of this cycle.
Dinesh, am I audible?
Yes, you are audible now, sir. Yes, go ahead, sir.
Okay. Yeah, let me tell. You see, again, we have set up in 2010. It's more than 10 years. And we could not extend any more in Odisha. But in Chhattisgarh, we have funded our capacity manifold. There is Odisha is not a simple state as Chhattisgarh. It is very difficult to work with. And that's the reason we could not expand Ardent Steel in Odisha. Now we have the captive resources in Chhattisgarh. So whatever we will invest in Chhattisgarh, that will give us much more, whatever as compared to what we are going to invest in Odisha. There is a challenging environment in Odisha itself. The procurement of raw material has already become a challenge. And I am sure many of the pellet plants are not able to source their 100% of the raw material. But because of this strategic investor which has joined hand with us, we are able to secure our raw material to our full quantity. This guy is not a financial investor. He is a strategic investor. He is an investor who has a very long experience in dealing with iron ore. He has direct contacts with the mine owner, not with the brokers. And we have seen his performance also. He has always delivered our requirement, better quality at a cheaper price. And that was the main reason to divest Ardent at this point of time. When time is good, investor will come. When time is bad, nobody will come. I remember the days of 2016 when I had to shut down the Ardent Industries temporarily for about 1.5 years. That time the debt was about 175 crores. I was ready to dilute my equity even at 1 rupee, but there was no buyer at that point of time. I believe you can sell an asset only in good times, not in the bad times. And the incoming strategic investor is going to ensure our smooth operation of the plant, availability of the raw material of the high quality and at a cheaper price as compared to other pellet plants. And that was the reason we have divested Ardent.
Thank you, sir. We have next question from Bachi Raj Nagar from Milli Consultant. Please go ahead.
Yeah, thank you for taking the question and congratulations on excellent result. I have one question. Basically, since at Chhattisgarh you are having high grade ore, and because of that your efficiency of pellet plant and sponge iron plant and then subsequently billet plant is going to be increased as disclosed by you in the annual general meeting substantially without incurring much capex. So my next question is that now your debt has come to may come to reasonable level if the trend of the current price remaining the same expected to be. So whether from now onwards is it possible to management start thinking of value adding from the great quality of iron ore? What I mean to say that we are getting 4,000-5,000 rupees only EBITDA from the pellet when we sell currently, and if we can convert it into the addition of the steel basically, which will be the great kind of quality steel, we may get 8,000 to 10,000 rupees per ton, provided we put up either the mini blast furnace or any other route, and that can give the company really good mileage, and the company is capable now because of the good returns. So we should think on those lines if possible. This is my suggestion or my question. I need your guidance on this basically.
I would like to answer this question, and first of all, I really thank you very much for your wonderful suggestion. Our aim first is to be debt free, which I am sure in the next 2 years, if the market situation continues to remain so we will become the debt free. Meanwhile, Chhattisgarh government has announced a special package for some category of steel industry very recently, and we would like to encourage that opportunity also. But to set up a steel industry, we have to search for the land, a large chunk of land, which may take about a year. Then you have to apply for the environmental clearance. That will take another 1.5 years. And then setting up the plant will take minimum 2 years. This is 4.5 years cycle. I am sure in next 2.5 years, we will become debt free. Now we have surplus pellet capacity in our existing Godawari operations. Our captive consumption is 1/3 and 2/3 we are going to sell in the market. And we are in a position to produce high grade pellet also. Definitely, your suggestion is welcome, and we have already started thinking to captively consume our entire additional pellet capacity which will mean about setting up a 1 million ton integrated steel plant. And using the high-grade pellet, where the phosphorus and sulfur is already very low, our pellet consumption will also be low, our raw material cost will be also low. So as compared to other peers, we will have definitely cost advantage as compared to others. So we are thinking of that. Now, but we have already started searching of land. We have some parcel of land available, but that area may not be adequate to sustain that 1 million ton capacity. And we are definitely thinking in this direction, because after the debt reduction, we just cannot accumulate the cash flow and deposit in the bank, or every year just pay the dividend and nothing doing else. We will expand definitely. And once we become a player of more than 1 million ton, so definitely the company is generally being re-rated. Now we also fall in the category of large players. So definitely in future we are going to take up this issue.
Yeah, thank you. No, just to tell you one more point, basically, that this only Godavari has this kind of unique position. No other company in the country, steel making company, have this advantage of high grade quality of iron ore. So that is very positive on your side, and I think companies should definitely see now, because the debt is, I am sure, by December 2021 and only the will come to zero, which is your target. And the second point I want to suggest is that, like, if you go for mini blast furnace, you can go for the coke oven also, so that you can generate power for yourself. And this company can become, you already have the renewable power basically, so company can become the green power or green steel making company if you really seriously consider in that direction also. And that will be again unique position, carbon neutral. Many companies are going in that direction. So this is again one more, I will appreciate if you can throw some light on that.
It's a very good suggestion to become the green steel company.
Correct,
Hello?
Sir. Yes, please.
And we have already taken some initiative to become the green steel company. We are currently importing some amount of grid power to meet our enhanced steel production. Currently we are doing about 4 lakh ton, but March onward we will be doing about 5.5 lakh ton. So for that we require additional power also that is available from the grid only. Now we have already planned to go green and to set up not ourselves, but to outsource the solar power from some large investors on a 25-year fixed tariff basis, wherein we might have to infuse about 26% as equity only, but there is no debt burden on our companies and no guarantee from our companies, and power will be quite cheaper if compared to the grid power, maybe at least 30-40% discount. That will be green power again, and we'll keep on your recommendation in my heart and soul, and we'll try to be a green company, green steel company, maybe in the next 4 or 5 years.
Thank you, sir. Thank you so much.
Sir. We have next question from Jinesh Shah, an individual investor. Please go ahead.
Yeah. Hi, sir. I just wanted to know what are the chances of increasing the capacity of mining in Chhattisgarh state?
We have already made our environmental application for enhancement of our Aridongri mines from 1.4 million ton to 2.3 million ton, and we hope that maybe in the next 1 year, we will, once after we receive the environmental clearance, we will enhance our captive mining capacity.
Okay, sir. Thank you.
Thank you, sir. That would be the last question for the day. Now I hand over the floor to Mr. Dinesh Gandhi for closing comments. Over to you, sir.
Thank you. Thank you very much, ladies and gentlemen, for joining this call. I hope we have been able to reply to your questions to your satisfaction. If you have any more questions or about our business, you can always reach us, and we will be happy to answer. Thank you very much. Thank you very much.
Thank you, sir.
Yeah.
Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Dur Sabah's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.